No, I wouldn't say it's been altered the last 12 months. I'd go further back and say, over the last 5, 6, 7 years, we've what the general consensus deems to be quality or meet our investment criteria, we've changed our views a while ago. The classic example is Amazon. When we built our position in Amazon at 260, 270 a share, it was deemed and it was consensus in the market that it was profitless prosperity. It had no earnings. It was on a stratospheric metrics. People thought it would never make a profit. And you've got to recalibrate your thinking, and you've got to look a little bit deeper than prima facie metrics. You've got to look at what's revenue doing, how is this business being able to consistently grow and fund itself if it's not issuing any equity, it's barely raising any debt. Well, therefore, by definition, it's got huge amounts of internal cash flow, which it did have. And so that now has become apparent 6, 7 years later that the equity trading at less than a few $100s a share today is trading at 10 times that amount, 11 times that amount. And that ability to recalibrate your thinking and that ability to look at a business and look at an industry or the industry that it operates in and take a slightly different perspective, that can put you in a position where you can extract very substantial outsized returns by having a variant perception and taking a view on an industry or a business and thinking about not where will it be in 12 months' time, but where will it be in 5 years' time, in 10 years' time? How will this business look in the future? And that is something that we've been doing now for a considerable period of time. And if anything, there's been an accelerant to some of the businesses we've had on our watch list as a consequence of this this year and what's transpired, and the pull forward that brings to a variety of sectors, a variety of industries, and hence a variety of businesses. Well, we've evolved the portfolio quite dramatically in that we've shifted away from some of the positions we've held for a considerable period of time. Position we've held for over a decade. WD-40 has been a multi-bagger return for us. And it really had got to a point where we saw some upside, but the upside was relatively muted. And perhaps the fact that you own something for a decade, it's delivered huge returns, you don't want to get emotionally attached to situations. And we have found that holding positions for long periods of time has generated outsized returns, but you also need to sit there and say what's the optimal return on capital, what's the incremental return on capital from here. So we've made a few decisions on situations where we think there's capped upside or the upside is relatively muted. It doesn't mean they're not good businesses or they're not great businesses. We just feel like we've extracted a lot of excess return out of them. So WD-40 is an example of a position where we've exited. Colgate Palmolive, very high quality business, but we've exited and extracted what we think is a acceptable return. Linde, which is the old Praxair and Linde merged, got to a level where the valuation we believe was fully reflected in the share price, in fact well beyond. So we've made a couple of transitions in the portfolio, and that's really been underpinned by the fact that these businesses have reached full or fair value or a premium to what we think is fair value, and rotated into situations or positions where we think they're very high quality businesses, they meet our criteria for industry structure, for secular growth, and we can buy them at what we think are attractive prices. And there were some opportunities that existed in a number of months ago, July, August, and we took advantage of the sell-off in March and April, and were able to build a couple of new positions there. One being Otis, which we've spoken about with our investors, which we built in the March, April time period. More recently, in June and July, we built a position in Pinterest, and we've built a couple of other positions that we would like to add to, so we're not actively talking about them at the moment.